Okay, I want to ask you a couple of things about this. Firstly, if you say the RBA was too timid and slow to raise rates last year, what's your assessment of the Governor Philip Lowe's performance?
Well, I think he's done a great job over the years. I think that was one. There was two problems, I think, and again, it's easy to criticise in hindsight. But one is communication. I think the bank should have been very careful in the way they used what they call unconventional monetary policy. These are where you promise interest rates aren't going to rise for a long period of time.
Exactly, that was so misleading.
Lots of central banks used that in their toolkit. They tried to convince people that they weren't going to tighten policy to suggest people should go out and spend. All the central banks did this. The problem was that I think the governor was a bit too specific in the timing of when rates would go up again. And I think that was just miscommunication. I think the second issue is what should interest rates be? And I would disagree with where we are on interest rates right now.
Yeah.
But again, I could very well be wrong. We could have a shock come along where this is the right level of interest rates. I just haven't seen the shock yet.
This is what I want to ask you. You know, if you say that the interest rates should be closer to 5% or, 4.7%, then aren't you worried about the financial turmoil we could be thrown in, GFC-style contagion? We've already seen the collapse of Silicon Valley Bank, the acquisition of Credit Suisse. I know banks are stable in Australia, but there are non-bank lenders, there are managed funds that aren't as tightly and closely regulated. I mean, APRA, you can debate whether or not it's really got very strong oversight. So what do you think about that?
So, Sharri, that's a really good question because I was on the board during the global financial crisis. This is quite a different crisis to that. Nobody knew when the market started to collapse in the US, just where all the assets were being held, where the liabilities were. It was a complete confusion. We have had a decade to get the regulations right in many countries, although the US has backtracked under President Trump. The point is that the Silicon Valley Bank was quite a unique failure. They had long-term government bonds on their balance sheet. They had a massive inflow of deposits, and the interest rates went up, and they hadn't hedged it, which meant that they basically went belly up. The other spillovers, which is where the problem is a contagion.
Yes.
Now, the problem with contagion is you might have a very healthy bank and people pull their money out. That bank is no longer healthy, and the policymakers have to make a judgment. Is the bank illiquid or insolvent? In many cases, under current circumstances, you'd have to guess they're mostly illiquid. When it comes to Credit Suisse, they were probably insolvent, but they've been going down for several years, and so that's not necessarily a related incident.
Yeah, Warwick, McKibbin, we are completely out of time, but I really enjoyed that conversation. I'd love to have you on the show again to talk about this as, the situation in the banks globally continues to unfold. Thanks for your time.